Johnson. I serve as a director of CFA Society South Florida. I most recently served as your public awareness chair for 2 years. I have served on the board of directors for 7 years. We have one announcement before our webinar begins this evening. Our 20th annual Alternative Investments Dinner is on Wednesday, October the 20th at Farmer's Table in Boca Raton, Florida. Our guest speaker for the evening is Mark Yusko, founder and CEO of Morgan Creek Capital Management, a hedge fund based in Chapel Hill, North Carolina. Mark's presentation is titled Get Off Zero, the investment case for digital assets. If you have an interest in cryptocurrencies and blockchain, please be sure to join us for dinner and Mark's presentation. Registration is currently open via our website. We are expecting a very strong turnout. Our special guest and presenter this evening is John Person, CTA, an expert in the field of technical analysis. John's webinar is titled 3 Top Technical Tools for Better Stock Picking. John is a 30-year veteran of the futures and options industry. Early on in his career, John had the privilege of working with George Lane, the innovator of the stochastic indicator. John is a registered commodity trading advisor and works from North Palm Beach, Florida. John has been widely quoted by respected business journalists in such publications and media outlets as CBS MarketWatch, Reuters, Dow Jones, and CNBC. You can find additional information about John and Persons Planet via his website, www.personsplanet.com, and his YouTube channel, Persons Planet. This webinar is eligible for 1 unit of continuing education credit by the CFA Institute. The first 10 registered attendees of this webinar will be receiving a copy of the 2nd edition of John's book, Candlestick and Pivot Point Trading Triggers, published in October 2020 by Wiley Trading. This program will run for approximately 50 minutes with the remaining time devoted to a Q&A. Directly after the webinar, you will receive a 30-second survey asking for your feedback. Once we get started, please be sure to use the Q&A feature to submit your questions. Without further ado, please welcome our special guest and presenter, John Person of Persons Planet. Go ahead, John.
Well, welcome. Thank you, everyone. I have a bunch of monitors over here, and so it makes me look like I'm staring left and not center and right. The camera's there, and the monitor I'm using for you guys is over here. So tonight's presentation is, first a couple disclosures. I think it would be important to know that trading does involve risk of loss. So we can take a gander at this one. This presentation is being recorded with full permission, so I hope it's something that your industry and constituents and members will review. The second disclosure I'd like to point out is that while my name is often affiliated with Persons Pivots and commodity trading, and while that is true, I did develop an indicator called Persons Pivots, and I'll share that with you today. Most of my trading is equity-based, and I run a small managed fund and is in equities and equity-based. This has been a hell of a year, and pretty much for the last 8 years, a really incredible market in the sense of rotation, the way players can come in and out of sectors as a whole, the advent and increase in popularity with cryptocurrencies. I could throw a little bit of humor on things, so I'll try to keep it more professional in business. Weed stocks, pot stocks. I mean, in high school, it was something you could get arrested for, and now everyone's all over, and I'm investing in this space. So we've had a really incredible amount of new companies, IPOs, new technology, old companies, reverse splits like GE. I can go the pandemic, the product we're using currently, Zoom. It's just been an incredible run. the worst trade of the last 2 years I would share with you guys, and this is indicative of how this market and the money, how we underestimated velocity and price changes. The worst trade I did was last year. I bought Wayfair at 32 after it bounced off of 22, and I proceeded 5 days later to get out at 78 because of my technical analysis suggested volume was drying up and there was a gap down at 55-ish. And so I elected to get out of the trade. 3 months later, it went to 350. So I consider that probably the worst trade, as they always say in this industry. Sometimes it's best to sit on your hands and not do things. But this has just been an incredible journey. And some of the tools that have helped me, I want to share with you, because I developed these years ago. And as Stephen eloquently pointed out, I did have the opportunity to work with a guy by the name of George Lane. George and his wife, Carrie, he developed this indicator called stochastics. I then went on to trade at the Chicago Board of Trade, where I learned through First Options Corporation to trade options on bonds. I traded in, had a comp seat where I traded the 30-year bonds and bond options. So I had in 1985, I had a really good knack for wanting to learn about the financial markets, and also a good teacher and a guy I worked for 2 years. I had a good base of technical analysis. And then when I applied that to options, on futures, I was able to capitalize and learn how to leverage my leverage on a leveraged product, so to speak, within the futures and using options. As times have changed and we developed in 2005 with the increase of usage of ETFs from the Qs and the spiders, we came in with GLD, and people didn't know how to react with that. And then again, commodity-based ETFs like USO. And then now we have, I mean, I don't even know all the products of inverse and leveraged ETFs that are out there anymore. It just, the list keeps growing. But one thing is constant with this market, and that is change. And one of the things that I think is powerful is to identify those changes. And through the computers, we're able to do that with scanning features. Now, some traders or investors or those in the money management business have a different time horizon than I might. And the long term for me is 3 to 5 years. Short term swing trade is 3 to 5 days, or the same day if I'm really right or really wrong. And so I would like to share with you how I come up with trading opportunities and what tools do I use to help me with that. And that's the topic today, about 3 top indicators. This year, 2021, and this slide I used just a few weeks ago, so it's probably even outdated. Hot sectors: eco-friendly, electric vehicle, Tesla. Again, everyone's thinking that Ford and GM might have longevity longer term. I would argue if you're not interested in eco-friendly electric vehicle markets, there's a stock, Goodyear Tire, is a great indicator, long-term indicator, no matter what vehicle you choose, unless it's they use Michelin tires. Goodyear, GT is the stock symbol. We'll review a couple trades popped up on our scans a couple weeks ago. Anyway, green industry with the new administration and the change in Washington, D.C., everyone thought that there was a big run in EV, electronic vehicle, and clean energy. There's a ETF, TAN, T-A-N, a solar energy sector. And that space has taken a hit recently, but financials, with the obvious increase of one of these days, we will see interest rate normalizations. I'm not sure if it's going to happen again in my lifetime, but one of the things that we see is the bank sector started to improve, whether that would be the regional banks, conglomerate banks, property, casualty, and health. A couple stocks today popped up, by the way, Metropolitan Life, MET. So it seems that the financials are still a hot and growing sector. Cryptocurrency, as I already mentioned. And then again, semiconductors, and everyone knows, if you're not familiar with a company, small guy called NVIDIA and AMD, really had an amazing tear this year. We also have, again, as I was jokingly a few minutes ago, weed is a big sector right now. And quite frankly, we have an earnings out on a company called Tilray this Thursday. So you may want to be taking a look, and we'll take a look at that and run some scans there. And then again, the commodity markets with energy. We just touched an $80 print in crude oil. Seasonally speaking, crude oil this is not the time of the year when we see an increase in crude oil prices. Usually we're winding down. If you're living in South Florida, you understand the dynamics of something called, I think the Greek term is hemorrhoidus interruptus. That's AKA known as hurricanes. When hurricanes come to South Florida, we pack up our bags, we batten down the hatches, we got boats to check out, we got to tie up, we got houses, hurricane windows to make sure everything and the shutters are snug. And yet, usually speaking, as we approach October, hurricane season winds down and energy prices, crude oil specifically, sells off. This year's completely different, as is natural gas. Agriculture, we had a huge breakout this year in the grain complex, soybeans hitting the high mid-teens. And we have a lot of different, with the news of China, things that had happened in the market over the last few weeks. We saw an increase in volume and an increase of buy signals in fertilizer stocks like Mosaic and CF Industries. Those have been pretty hot. And again, industrial metals. And then lastly, volatility products, as traders, I think, have abandoned hedges, which there used to be a way to hedge your portfolio and have it beta weighted against the S&P or the Qs and use options. And a lot of traders have, got fed up with losing premium in options on downside put protection on the SPY. So what do? They've used volatility products. One that I trade actively is the volatility ETN, the VXX. So I think the idea of anyone managing money, the idea of anyone trading their own accounts is to not chase after what was, but to try to look for opportunities. And in this day and age, unless you're a Fed member or someone related in Congress where you can get better inside trading information or better information, no pun intended, there is someone that's always in the know. And we see this through upgrades and downgrades. Today, 2 weeks ago, Ralph Lauren got a downgrade. The stock got slammed to 110. Today, I think a company called Wedbush upgraded the stock and it rallied up to over 122. It's kind of funny because that path of volume that led up to today's upgrade was already present in the market. So if you have the right tools, you might find yourself with the capability of seeing some of this money print coming into the market. And so there's another element of the markets that I did not touch about today, and it's called seasonality. One of the books that I partook in as a co-author and editor, which through John Wiley and Sons was called the Commodity Trader's Almanac. And you're probably familiar with the Stock Trader's Almanac. And Jeff and I, his father, Yale Hirsch, who created the Stock Trader's Almanac, Jeff and I wrote that book. And then it was, they stopped publishing it. I think the last year was 2013 because, well, no one had an interest in commodities. And the funny thing is that book was based on commodity-based stock and equities based off of commodity trading. So it still had a lot of relevance, and we can still find some seasonality trends in the market. I think a lot of people are familiar with seasonality, and I want to just give you this one disclosure before I move on to the more dire information. I always said seasonality is something to pay attention to, but technical analysis supersedes seasonal trends because something can go askew from a seasonal trend. Something that happens consistently. Some years, a seasonal trend might be muted or magnified or not happen at all. But there's certain times of the year that you look to buy gold or gold miner stocks. And we are actually entering in the next week to 10 days, one of the strongest time periods that we do see a bottom in that space. So I'd like to cover that a little bit today for you. Seasonality is good, but what works better is that if the market isn't been in sync with seasonality, that it may remain in sync with seasonality. So what helps me to determine a buy or a sell signal is based on these three top indicators. First, I use a tool. Tradestation is one tool I use because, well, I've used it since 1996. I have several indicators that are present and it allows me to code my own as an independent trader my own trade strategies, but they had a function called the radar screen where I could put my own criteria up and have it alert to me. And I'll share that with you in a minute. Three of the things that I use is something called a momentum price indicator. It's called Persons Pivot Study, PPS. This is a tool that actually paints arrows on the price of a chart, whether it's a tick chart, a 30-second candle chart, a monthly chart, a weekly chart, a daily chart, whatever you're looking for, and it'll show positive or negative momentum. We, from a compliance standpoint, don't like to call it a buy and a sell signal. We like to call it a bullish or bearish indicator. Through the technology of different platforms, whether it's Tradestation, or I'll share with you that this tool is also available on Thinkorswim, and which Charles Schwab has acquired. Many people have access to Thinkorswim's platform. I have three of these indicators that I'm talking about today are all found on Thinkorswim platform. So first and foremost, we can run through the technology scans and say, show me what stocks are generating buy or sell signals today. I can add another layer and say, show me what stocks are generating buy and sell signals with increased volume. And that to me is the lifeblood of the market. Volume tends to precede market moves, and it's subtle and it's sneaky. And a lot of people have been hearing about unusual volume activity in options. And the fact is that intraday volumes on stocks, you find that many times when you see these unusual volume activities in an underlying option on a stock, there's unusual option in the underlying stock itself. And I'll share with that right now how I measure that. So let me first get my page up, and hopefully here we go. So this is a Tradestation page, and I'll just share with you what the columns are and how I tabulate things. Down below are charts, starting left to right. I have a monthly chart, a weekly chart, a daily chart, 60-minute, 15 and 5, just because, well, I'm a junkie. I have a top-down approach. I start with sector ETFs. The columns are listed, as you can see, daily. This means that these are all end-of-day data. It gives me the net change in terms of actual price and percentage, the high, low, the range. And here's the topic of volume. I'm looking to find out if a market was up or down, is it on good volume? Define good volume. A couple of things that I look at early in the morning, the first hour, for example. If I see a stock that's rising and that has greater than 20% of its 10-day average volume. So in the case of TLT, which is an exchange traded fund on bond price, the 20-year plus ETF. If, let's just say, and I'm not saying this happened today, but let's just say that the volume, the market is down and the volume is 4 million shares within the first hour. That's 20% of the 10-day average volume. Now, how do you know that? Because on this column here, it says volume average. And I'll just, as for disclosure purposes, you can see that it says average length is 10. So this is the average of the 10-day volume. So that's about 2 weeks, half a month. So on a daily basis, I'm comparing what is today's volume over the last 10 days. I don't want to know about the last 3 days, 4 days, because there could have been a spike. It could have been a low volume day. I want to know what the average volume is over the last 10 days. And I want to compare current volume patterns to the 10-day volume patterns. So that's one way of measuring volume. We also use an indicator that I did not create, but I like to give full credit to those who have done and have given the field of investors some good information. Wells Wilder, for example, a lot of people use his overbought, oversold indicator, RSI, relative strength index. I choose not to use it because, quite frankly, one of his best works is actually the ATR, average true range, and we'll cover that in tonight's session. I want to know what the average true range of the market is. Are we exceeding the range? Did we already exceed the range of its ATR in a very short order? That means there's something really going on. So it's measuring the participation of a price of a trade. It's also measuring the pace of price change. And those are two components that are very important not about, hey, is this stock going up, but what is the condition of that stock going up or down? Finally, this is a column here. It says Persons Market Catcher. This is the PMC. This is, we'll go into detail a little bit about this because for stock traders, this is, in my humble opinion, critical in this environment. This is a relative strength tool, which I did not invent relative strength. I just developed a way of looking at relative strength differently. I've had this tool out. It's been available on Thinkorswim for, I think, 8 years at least. The PMC, Persons Market Catcher, is what we called it. It identified a market in 4 different stages. Outperforming, which would be bright blue, which is good if you're bullish. Dark blue, which is weakening, but still relatively strong compared to the overall market. The overall market in this case is we're comparing it to the S&P 500, SPY. Then the next one is weakening, and that would be, or red, and that's if long, no bueno, that's bad. And then finally is fuchsia, which is improving. So I'll kind of share with you on a chart what that would look like on a PMC as we get into the PowerPoint. What it suggests to me is another platform that I use is called HGSI software. This software is in a very inexpensive software. I do not own this. I just have my indicators on it. And this is a software that literally you can program. It's phenomenal program for those not interested in like Python or other type of system development data software platforms. But what this would do for people is this allows you to, at least for me, put down not only in numeric value, but any value, what I want and what I'm looking for. And I ran scans. This was for the week. This is how many weekly buy signals as of last Friday's close coming into this week. And this is the actual page. One of the stocks that came up on our scans was, of course, Ralph Lauren, which I had already mentioned. The relative strength is outperforming. And if I just click on this and expand on the chart, this is to highlight the relative strength tool. Many of you might be familiar with a little bit of technical analysis. And what I want to explain about this particular indicator tool, relative strength can work from a 0 to 100 range. A lot of people look at relative strength and that if it's over 80 or 70, the market's overbought. But I'm looking at this tool that helps me to uncover both overbought, oversold, and divergence patterns. So if a stock like a Ralph Lauren, which if it's starting to show, and this is a daily chart, so I'll change it back to comparing an apple to an apple. We were just looking at a weekly scan, so this is what it looks like on a chart. This platform tells me what the dividend tells me, fundamental information. It gives me all kinds of background information, data that I might want to make a better trade decision if I want to get into this stock long term, as a short term, or just avoid completely. The relative strength was starting to improve, and you can see the histogram bars getting better. And when the histogram bars, when I say getting better, the lows are getting higher, they're getting less severe. So buying a stock near a high up here in January, for example, when the relative strength and the market's making a new high and the relative strength shows that it's weakening, this is one that you would want to tighten up your stops and say something's not right. The relative strength is not leading the market. So as the market starts to generate a sell signal, if you're still then not actively exiting the trade, protecting your position, then you probably need to learn how to use this a little bit more efficiently. A sell signal under weakening relative strength conditions is not a good thing for investors. Now, long term, if your horizon is, hey, I'm 5 years down the road, this isn't that important to you, that's okay. But for a trader that, a stock that goes from 120 down to like 65, it is more like a disaster in the making. Most people when they buy and they don't have a stop, they generally get out on the low because there's some news that says things are going to get even worse and they make bad decisions. So a PMC, what this tool does is it helps us to uncover other items such as bearish divergence, markets that make higher highs with relative strength making newer lows or not conforming to that price high is showing some relative weakness. Inversely, stocks that make newer preceding lows and the relative strength is starting to improve is something that captures my attention, and what we look for scans just for something like that, an improving relative strength and a market that generates buy signals. The relative strength in this case is in Ralph Lauren starting to improve, and that this week we actually made a recommendation in this stock. But needless to say, volume plays another component part. Now, this is a tool that I think everyone should have access to. It's on every platform under the planet. A guy by the name of Joe Granville. Sorry, Joe. As a disclosure, I think Stephen and I had a discussion before we began. I was talking about some older technicians, Hank Pruden, for one, who's passed away. My old boss, George Lane, who passed away. Wells Wilder, who's passed away. And then Joe Granville, who's passed away. I seem to know and have known a lot of people in my life that are now passed away. So I'm knock on wood, I'm not in that category yet. So, but this is a fabulous tool that helps to detect changes in volume trends. And if it was up to me, I would say outlaw volume histograms, because volume histogram doesn't really offer a whole lot of information to people. And I'll show that hopefully in a second, and compare an apple to an apple with an on-balance volume trend. And by the way, the blue is the actual tool, on-balance volume, and the yellow is just simply a moving average. And what I'm looking for is, just like I shared on TradeStation's page, I'm looking for the current volume to be greater than past or prior data. And so if the current trend of volume is exceeding older volume trends, it tells me that there's something new developing. All throughout this sideways range, for example, when we look at Ralph Lauren, that went from approximately March to October of 2020, just sat here in a fry pan bottom pattern, just did nothing for any investor. All of a sudden, something changed course. The relative strength started to improve in this short period of time, and the volume started to spike higher. This was the sign that there was a shift in not just sentiment, but also more importantly, participation. People were, institutions and others were starting to buy that stock. So is there validity in a price action indicator? Yeah, you need something that says, by the way, the price has changed. We got a buy signal. Okay, so we have a momentum price indicator. We need a condition. When you're comparing a stock to the overall market, what is the condition? Is the relative strength improving? Because money chases money. And I'm pretty sure every one of you know that. You know, you're not looking to buy the stock that's about ready to go bankrupt. You want to buy the stock that is shooting up, and you want to buy a stock that has good capital inflows. You want to look at the fundamentals. If this stock is growing, then money is going to chase that. So again, money tends to chase money. With that said, if money is chasing money, you want to see volume accumulation, because there's nothing worse than a stock going straight up. There's no volume. 2 days later, it just drops right back. So you want to see volume participation. And those are pretty much the three tools that I like to use that I wanted to incorporate in today's presentation. Now, I can get into all kinds of things like Bitcoin, and this is a page that I have for cryptocurrency. One's a 15-minute strategy system that trades automatically. This is the GBTC. We can apply, as you see, I have on-balance volume. So I'll just go through a couple little things that you can see on almost all my charts. This is another one that I think for a lot of traders or investors to look for the cap weighting changes in the markets. This is one that's not really for stock picking, but it helps to give me clarity on the condition of the overall market. This is the S&P 500, and you'll see on balance volume. This is a proprietary volume tool that I created, and I'll just briefly go over this. This actually filters out on balance volume, and it's created differently. First off, it's a momentum indicator. Second off, it does not take actual volume changes. It tracks volume in terms of percent change. So if I had to do this by hand, I'd blow my brains out. But thanks to computers, I'm able to detect better changes in volume, not by numerical values, but by percent changes. So again, the key element is price, volume, and condition. And those are the three kind of things that we can utilize and use technology and run scans and say, hey, what sectors are getting bid up? I mean, I have an idea that, software application technology stocks, Adobe, CRM, Salesforce should do well. But are we seeing real strong concentration? Is everyone wants to buy semiconductors, but is maybe that space a little overdone for a while? Is there opportunities somewhere else that I should be picking up? Like, for example, maybe agricultural stocks, fertilizer stocks. Is there metals and mining? Is it time to maybe start looking at buying gold miners soon? Running scans with these types of indicators will help us to conclude yes or no. The element of different tools, and I think it would just be best that I just touch on this subject matter. When it comes to trading the indexes, there's one tool that above all, rather than a price indicator, is the condition indicator, and it's called breadth, advanced decline. Now, a guy by the name of Sherman McClellan, who, well, I know Sherman too, and his son now runs the show, Tom. This is a McClellan oscillator, but I modified it, and that's why it says JP Mc oscillator. What is this? The McClellan oscillator is a tool that took the data from the New York Stock Exchange Composite Index and applied a moving average component and a momentum indicator. I don't trade the NYSE. I'm pretty sure many of you don't either, because it's an index and it's not tradable. And with the cap weightings that we have with technology and the FANG stocks, and the effect of technology on the Qs, the NASDAQ 100 and the S&P 500, we tend to get this rotation. And one of the things that's interesting is while we might have 30 to 40 stocks go down, the stock market might go down. But if the breadth of the market, the accumulative advanced decline line starts to improve, it shows me that there's an undertone bullishness to the market. The opposite is true. If the market starts to go up and up and up and the breadth starts to weaken, it shows more stocks are actually selling off, and that's not positive. So once again, back here is the advanced decline, and basically this is a cumulative advanced decline line on the S&P 500, and I've taken two moving averages, a short term and a long term. When we get a short term crossover, which is the yellow below the blue, that's El No Bueno. That's another sell signal official. It means something has really dramatically changed within the market. Inversely, when that yellow line crosses back over that blue, as you can see, they're quite finely separated. That will tell me that there's a better odds that the market is on an improving note. More stocks are rising relative to falling. So the advanced decline cumulative ratio line is very important in my work that I use for top-down approach trading. But back to the McClellan oscillator, here is that McClellan oscillator. It's modified in the sense that it does not use the data from the NYSE, it uses the data from the S&P 500. Now, we concluded today on a positive note. We were up, as you can see, over 1%. We had 368 stocks in the S&P 500 on a positive note today. We had 133 down. I break this down for the top 5 markets that I'm looking at: the S&P, the NASDAQ 100, the Dow Jones. Not hard to do. There's only 30 stocks there, and the Russell. And out of the 4 of the stock indices here, and then the NYSE, but out of the 4 stock indices, something I'd like to point out to you is the Russell small cap growth has done nothing pretty much since February. It's been sideways range. Ironically, the McClellan modified, this again is the McClellan oscillator, but it's based on the stocks in the Russell, the IWM, the Russell 2000. The advanced decline comp line, same concept. The short-term moving average did cross above the long-term. If we get another 3 to 5 business days with that relationship still turning positive, it is my contention that you may want to be more exposed to small cap Russell or the IWM or the Russell Index, the RTX, if you're familiar, as we get into year's end. There is a thing called, from a seasonal perspective also, where we get the January effect where small cap tend to outperform larger or mega cap stocks. What I would use to say, is that a valid idea, is if we start to see more volume come into that trade, because that means I'm not the only one with that idea. So if we get volume as a confirmation and we get more stocks rising relative to falling, and this is increasing, it's showing that there is a potential for the Russell to outperform and see a decent liftoff as we head into December. So one of the things that I could say is different. You could clearly see the relationship of the on-balance volume of the Russell here, looking at the on-balance volume indicator with the Dow Jones Industrial Average is still falling. It's below a higher time frame moving average. That's that dark blue line. I hope you guys can see that. And as you look at the NASDAQ 100, the same thing. The on-balance volume trend is moving lower. It's not turning positive. So in my humble opinion, today's little market rally in the Qs was no more than I wouldn't say a dead cat bounce, because, and these are pretty substantial swings that we're getting in the market, but it doesn't initiate for me to be long high beta stocks relative, or at least in the FANG names yet. So until things really start to turn positive in the indicator basis, I'm still not a big fan of buying the dip in the Qs yet. I don't think that that's just according to my work. So I just wanted to share with you, what are the tools that I use? How are they structured? Where can you find them? This is again, I use, just in case we couldn't do live and bounce between two different things. I had a canned presentation and a PowerPoint. This just highlights some of the things that we were able to have on our screen, including the Persons Pivot indicators. The PMC, I went through this in a little bit of detail. And so as far as the PowerPoint is concerned, this just, maybe you could read this thoroughly. Relative strength comparative analysis has been around for a long time. I think you hear a lot of folks on TV talk about, well, relative to the sector or relative to the S&P 500. And that is valid information, no doubt. And that's what other people are looking. What I did is I just fine-tuned that concept and put it 10 years ago, 8.5 actually, into an indicator that we could pick up by color, by numeric, and use in technology via scans of computers. So this is where I just wanted to highlight the 4 stages of a market. The market starts to improve, and that's the fuchsia line. And this, again, let's pretend this is just the on-balance volume. It is a volume tool and momentum. When volume's starting to increase and the relative strength's increasing, you get a little buy signal, a PPS buy signal. It tells me I can make a determination whether I want to join that trade or wait a little bit. When the market makes a newer high or attempts to make a high, and the relative strength is weakening and the volume is not supporting a secondary high, that's what we call a bearish divergence pattern. And I want no part of buying that, tighten up the stops. I might even look for a sell or a short or buy puts. Again, there's a PPS sell signal involved. And as you can see, if you line that, when did that happen? By using a tool that says, show me buy and sell signals. What's the condition of the sell? Volume's depreciating, relative strength is declining. This stock is starting to weaken against the overall market. So if I go back and use, just for educational purposes, let's punch up Thinkorswim. This is a page that I use on a daily basis. You've got the spider with a 1-hour chart here, the NASDAQ 100 here, the VXX, because I'm actively traded, Apple, Amazon, Tesla, Agnico Eagle Mines. Now, this is interesting because in the gold mining sector, Agnico Eagle Mines and a few other gold stocks started to show some buying interest between yesterday and today. Very interesting. So while GDX is not and GLD is not, those particular, we're starting to see some nibbling. One other area that I don't want to drive anyone into a trade, but one other interesting component that we saw as a buy setup or that populated on our scans was this, and I'm not, like I said earlier, I'm not familiar with every single ETF out there. This is something called iShares International MSCI Global Gold ETF. Miners, it's a global gold miners ETF. I'm familiar with GDX, GDXJ, the juniors, the larger JNUG, the leveraged ETF, but you learn something new every day. This actually did populate a daily buy signal today, and was something that's interesting. If you'll notice these blue lines, those are again Persons pivots. If a market is truly bullish, it tends to trade north of the pivot point. We want to see an increase in volume. Now, again, 3 days does not constitute a major bottom for a sector, but the relative strength, this is interesting. As the price of the stock has been declining, if we just drew a line against the lows, you'll notice that the relative strength keeps getting higher and higher. It's what we would call a condition of bullish convergence or positive divergence. I prefer bullish convergence because the line, if you draw it out in time, on the support of the lows of the indicator, and the line, if you draw it down on the support of the price, if you extend those out in time, they'll converge. So bullish convergence, bearish divergence, that's a John Person euphemism. Bottom line is, how do I find this stuff? By using Thinkorswim, I can just look at end of day. They have this built into their technology. So it's not my tech software. This is Thinkorswim, now owned by Charles Schwab, which was TD Ameritrade, which is now Charles Schwab. If you go to license study, you can, if you're looking to find out how many on a down day, here's an interesting way of looking at the market. On a down day, on a down week, if you want to find counterintuitive market dynamics, you would say, if the market's so bad, are there any stocks that are going up generating a buy signal? Now, I can't reveal what the proprietary indicator is built on, the PPS indicator, but there's 10 items that need to happen in order to generate a buy. Just because a stock is positive today does not generate a buy. That's a big difference. So the key element is for a stock to generate a buy on a down day is pretty impressive. The opposite is true for a sell-off. But it just so happens that you can, with Thinkorswim, if I want to go and I can run a scan and Lord knows anything I really want by sector, by index, by whatever. But let's just take a look at materials. I can run a scan, and what I wanted to do, just metals and mining, select metals and mining. I'm going to run a scan for end of day, go to daily, and I can add a filter, and I can go to a study, and I can go over here, and the study starts off with alphabetical. It says ADX crossover, and I can use volume. I'm going to go to using on balance volume. Since I'm using a buy signal, I want volume to increase at least over the last 3 days. Okay, so if I want to filter out and qualify what stocks generated buy signal, you'll notice I can also add another function and a filter about capitalization, prices, and I can filter out a lot of these penny stocks. However, what I like to do is the opposite. I like to just run a scan and say, was there a huge assortment of stock, concentration of stocks in that space that generated buys today? And I'll run it tomorrow, and I'll run it Thursday, and I'll run it Friday, because generally institutions, they don't get into everything all at once. They don't like to show their hand like poker. So they might buy a few, shares or a few thousand shares or a few million shares of this and that and that. And over time, they try to put spread their money out. So I want to start formulating to see if we get more and more buy signals over time. So that's one way that we can use the technology. How do you find my information? If we go to charts and you hit study and you go to, let's see, add a study. and they actually have my name. It's John Person. The PMC indicator is the relative strength tool. The PPS, that's the thing that gives the arrows sell. If it's an arrow pointing down, it means it's a bearish indicator. If it's an arrow pointing up, it's a bullish indicator. And that's where we run our scans with. And then Persons Pivots. Those are the three tools that are available on Thinkorswim with my work. So bottom line, I didn't invent on balance volume, but I use it on Thinkorswim to help filter out volume. So let's go over here and I'll just share with you this last tidbit. Let's go to equities. I don't even show volume subgraph if you're interested in knowing why, because quite frankly, it offers no valid information other than maybe one day was a big volume day. Let's compare and start looking at something like AMZN right now, Amazon. So Amazon started to lose relative strength and Amazon's volume started to sell off. As you can clearly see, the trend in volume on Amazon is down. I don't know what you want to make out of this deal because that doesn't tell me squat. It shows a few days were high and for the average, most days were right here. I don't know if you can see a trend in this gobbledygook of volume, but certainly on balance volume gives you an edge in the market and helps to detect clearly if you were looking in this phase of the market in Amazon back here in March, and it's a choppy sideways period. Okay, no problem. But all of a sudden, as it's getting choppy, the volume is increasing. You're making higher highs and higher lows. Price is sideways. That's accumulation. Also, during that same period, the relative strength was improving. It was getting less negative. It was even fuchsia, which shows that it's actually improving. When you got this buy signal right here, you had already been on an increase in volume and you were in an increase of relative strength and you got liftoff. So again, using the tool, it's not about the condition or the price structure of the market. It is really about the condition of the price of the stock that we're looking at. And again, this can be done whether you're a day looking for swing trade, quarterly trades. It can be done on a monthly basis. You can use this for higher time frames. You can use this for sector screening from seasonal perspectives. So that's why I use those particular tools. Now, in the beginning, I talked about ATR a little bit, which is average true range. And I'm going to go, as I think there might be some questions and want to give people an opportunity to ask a question or two. Average true range, Wells Wilder, by the way, is another guy who, as much as people use his RSI, his DMI positive, DMI negative was, and ATR, which the last DMI indicator was based off average true range. I think that's his best work, just me personally. I might be biased in that opinion because the relative strength indicator is an overbought, oversold. And as you probably heard in the introduction, I worked for a guy by the name of George Lane who developed stochastics. And I find stochastics to be a far superior indicator for overbought and oversold market conditions. So I did not use Wells Wilder and do not use that tool of his. But the funny thing is, you'll hear a lot of people talk about the RSI as an overbought, oversold price tool. And one of the funny things is it's, in my humble opinion, it's not one of his greatest works. But average true range, because he was actually a commodity trader, as a little education for you, Wells Wilder, we used to have these things called limit moves, and corn, grain, silver, gold. Markets would move the limit and they couldn't trade. You couldn't buy limit up, but you could sell. It might not be too smart of a career move, but if the market was limit up, it opened up in soybeans, and back in the old days, it was 30 cents. If the market opened 30 cents higher and it couldn't trade and it didn't go any higher, but no one wanted to sell, it was 30 cents open, 30 cents high, 30 cents low, 30 cents closed. So there was no range. He came up with the idea, no, there is a range. Let's take the difference between the greater of the two, whether it's the range or from the prior day's close to the high. And that's what the true range is, which adjusts for gaps. In this market environment, but you want to talk about gaps. I mean, here a gap, there a gap. It seems gaps are getting filled with gaps. Sarepta Therapeutics 6 months ago. And I mean, the list goes on and on with earnings surprises, beats, down beats, up beats. So gaps are still very, in this environment, insane. Average true range, if you're looking for a measurement of volatility, this is one of the tools and why I use it. Thus, the reason I shared with you what is on my screen that I use. I use a 10-day. Again, I'm big on the 2-week thing. Wells Wilder used a 14 period, and just a quick explanation why. He called it half a cycle, 28 days in a month. On average, he used 14 period. And since he traded back in the day where we didn't have 24-hour trading, I account for just 10 days. So that was the only slight difference, that I modified older tools to account for newer conditions in the market. Anyway, I do use a 5, mostly a 10-day, as I shared with you in my work. And once in a while, I'll pop up a 20. Funny thing is, the ATR, usually speaking, this is important for me to identify the market condition. And I just got rid of everything by accident. If you're trading a system and you want to know what's going on, markets that go through tight ranges, well, kind of funny, the Russell's going through that tight kind of range right now. But specifically speaking, when it comes to equities, volatility like the ATR is not a trend directional tool, but market conditions, such as in the equities, as you know, they go down a lot farther and faster than they go up. So when you start to see the 10-day ATR increase, it's starting to suggest that there's volatility, and bulls shouldn't be seeing a lot of excessive volatility generally. It means that the market's getting nervous and jittery, and that also leads as a precursor to market declines. So when the ATR expands, it heightens a period of volatility, which suggests that things need to calm down, dust needs to settle. A lot of fund managers don't like the risk, wild swings in the market. We can't account for what our risk factor is, for example. We shave our position size, volume shrivels, and volatility persists until the calm is restored. So a 10-day ATR will help maybe in the equity markets, help detect changes in periods that are about to increase in volatility. When volatility starts to decrease, that's when you start to see more calmer trading ranges develop. So just as a quick reference, that's why I have the current range and the ATR. Let me go over here to the futures and give you a quick history lesson on commodities. Back in December of 2018, when Jerome Powell decided to raise interest rates, we succumbed to a really nasty end-of-year sell-off. You guys might remember that. I think we could talk a little bit about politics. It started in November. We lost the Republicans lost the control of the House. We retained the Senate. The market, it didn't really like that. It was on a little mini death spiral. And then Jerome Powell raised interest rates, and it sent the E-mini S&Ps, which has on a 10-year average basis, a 39-point daily range. It sent the 10-day ATR to as high as almost 90 points. And people thought that that was just ridiculous. Fast forward to March of 2020, the 10-day ATR on the S&P 500 futures hit 248 points. So by the time April and May came back and the ATR got down to 80, and just 2 years earlier, people were freaking out that 80-point handles was just excessive. It seemed more normal. Right now, we're kind of sitting here in the S&P 500 in the futures at 77 points. So while we have an elevated ATR, it's not as disastrous as it could be or has been in recent years, but it is elevated right now, which suggests that the downside action is not over yet, in my humble opinion. When we start to see the ATR start to decline, the average true range start to decline and get back to like below maybe 67, 68 levels, and we start to see this thing start to detrend, then it would be an ideal spot to say, hey, maybe this bottom might be in. But that's my way of looking at certain technical tools. Anyway, how do I trust when a trade signal will make me money? I think one thing is for sure, if you're looking to buy a breakout in a market, if there's no volume and it's divergent and the relative strength isn't higher, showing that it's outperforming relative to the broad market, I wouldn't be looking at buying breakouts. And that's the dangerous part about markets. It's not about the price action breaking out. It's about also the condition of the market. And these technical tools are awful helpful in that case. If a market makes what we call a false bottom, a secondary lower low, most people would say, oh, that's no good, no bueno. And quite frankly, as you can see, this is a volume tool, on balance volume. And as the market starts to succumb to the upside, you can start to see the volume starts to trend higher. Interestingly enough, look at the volume action and then compare it to the relative strength. The relative strength, the price action was actually lower than the preceding swing low, but the relative strength was higher. That's also an undertone convergence that the PMC indicator will give you that the regular relative strength index tools generally can't, because they're not sharing that type of filtering using a series of momentum and moving averages. And that's what we developed that tool for, the Persons Market Catcher. So for equity traders, this is a very important thing. Hopefully I gave you a taste of what tools are out there and why they are important to use in this day and age, and they are extremely efficient. Again, nothing in this world is guaranteed. You know, the worst thing about being in this industry is trying to prognosticate. And as I always tell people, listen, if Alan Greenspan couldn't figure things out, how the hell do you think John Person is? And I cheat. I use tools and I put odds of success. And also, as my favorite phrase is, stops are not for sissies. Risk management, as I was always taught, you know, take care of the losers because the winners tend to take care of themselves. So with that said, I wanted to thank everyone at the CFA for inviting me to present. And I hope I was able to give you at least a taste and where to find these indicators if you're familiar with Fidelity. Listen to me, gray hair. Charles Schwab's Thinkorswim platform, as well as Tradestation. Thank you. And if we have any questions, we'll take those now. Thank you, Stephen.
Okay, Ursula, are you going to take the questions or do you want me to pose my question?
Or if there are no questions, make them up as we go. Joe.
I do have a question for John. John, this is Stephen. Can you apply the PMC to the IWM, which is an ETF?
Yes.
And how would you look at the broader market? How would you look at broader market ETFs on a short-term and long-term basis, sort of in this current environment?
Let me take the first question because it's super easy. And the second one, I don't think I heard entirely, so I'll have you repeat it. So if we take a look at the, we can compare anything to the S&P 500. And whether it's, and then we call that in the old days spread trading too. We used to do the January effect where you'd buy the Russell and sell. Well, it used to be, you know, you could do the KC value line S&P, and I'm talking way in the day. Some of you aren't familiar with the value line is. I don't think it's, anyway. If something is outperforming relative to another, it'll work. You just can't compare the S&P to the S&P. So if we take a look at the IWM and I'll populate a chart. And let me go to style, and we're going to edit this real quick. Study, and let's see, edit studies, and we should have this little tool here. The box will pop up, and we should have, let's see, the PMC indicator right here. It was turned off by accident, so let's turn it back on, and it should be right there. So let's expand on that. So ironically, this is the IWM on a daily chart. As you can see, it's pretty much at the same price as it was back in, well, exactly May 6th. And as you can see, what has been going on, and I'll tighten up the price so we can go back a little bit more in time. Been in a compressed trading range, not doing anything. However, it is been outperforming, as you can see, bright blue. It has been outperforming relative to the S&P 500 since approximately September 14th. So the market, if we overlaid the S&P 500, you will notice that it's outperforming because the S&Ps have gone down, the Russell's stayed flat. So relative to the S&Ps, it's losing less in this case, right? What we want to see is if the stock generates one of these little buy signals, or this ETF generates a buy signal, and the relative strength starts to improve like it did over here back in late October, early November of last year is another example. That's when the January effect, or the small cap, started to outperform relative to the S&P 500. And we started to see that bright blue. You started to see the volume, my volume indicator was surging. You got some good volume ahead of that trade. And so that's the kind of thing that we would look for. The only thing that's missing right now, back then we had an arrow, that buy signal there. We don't have one yet, and we need volume to start surging. So yes, the relative strength is showing right now, and you can compare it whether you want to look at the Qs relative to the S&Ps. The NASDAQ 100 is actually in a death spiral relative to the S&Ps, has been weakened. In fact, it's been in a bearish divergence. When it made its secondary high, the relative strength made a lower high. Price made a higher high, relative strength made a lower high. So again, the PMC indicator will not only share with you the different stages of a market, whether it's outperforming, weakening, lagging, improving, but it also helps to highlight convergence and divergence patterns within itself. All right. The second part of your question.
The second part was, how would you look at broader market ETFs on a short-term and long-term basis in this current environment? I think you've sort of gone over the IWM, that it's losing momentum. Is that in the short run here?
The IWM is actually outperforming relative to the S&P 500. It just hasn't generated. It's not going down. It's not going up. It's just sitting there. All right. Sideways. That's what the relative strength here is sharing with us. Okay. There's not a lot of volume in the market one way or another. And then if we use on balance volume, all you can suggest in this, what all this says is there's not a lot of selling pressure in the IWM. So money just, I mean, if all it is going to take is a couple days of maybe higher high and a breakout in a volume, and per se on balance volume participates, it would be my contention, based on rules of law, the longer a product is in a sideways range, the bigger the breakout. If it's true that relative strength and volume can lead a market first, then the market right now, at least the Russell, is set up for a rally going into year's end. Did that answer the question?
Yes.
Okay, so I think another thing you had asked is, well, how do you find opportunities in other ETFs? And I do cheat and use technology. And one of the things that I look for, these are sector ETFs, whether it's the oil and gas exploration ETF, which has been, maybe this would be a good study in hindsight. And as you can see, relative to the overall market, we generated a buy signal. And yes, we have long exposure and been long. Oxy, Anadarko, EOG, Anadarko, and Apache, excuse me, Apache, APA, oil and natural gas, Occidental Petroleum is some of the holdings that I have currently. The energy space, XOP, started to show improvement. Notice what I just said earlier about lower lows. Here's a print where an ETF made a new lower low. And I mean, clearly you could see that the print here, and just to get it up for you, it was August 20th, was clearly lower than the print on July 19th. But you'll notice that the indicators made a higher low. The volume made a higher low. So this was actually indicating of a bullish convergence pattern. By the time the PPS buy signal flips in, the relative strength's improving and there's good volume. It kind of chugs along, fake little sell signal, another buy signal. And I mean, the relative strength has done nothing but surge and improve and outperform relative to the overall market. That's XOP. You can break that down and go with different stocks. That's Occidental. APA, that's Apache, which, by the way, if you wanted to take a look at a higher time frame, I could be wrong here. But if natural gas is going to see somebody is buying the dickens out of Apache longer term, there's been a huge accumulation of volume. There's stronger volume trend right now than there was when Apache was trading up at 123. That, to me, longer term is a monthly chart. This is not a day trade, a swing trade. This is a long-term holding. And by the way, just for the record, go do your own due diligence on this. In the January of 2023, not this January of 2022, another year and a half from now, there's been a huge buildup of bull call spreads and options other than any other strikes, the 20 and the 40 strikes. So somebody is expecting this stock to be somewhere in between 40 bucks, and they did that trade for about $3. So it's a $3 risk for a year and a half, call it bull call spread in Apache, which is related to natural gas. And that's reflected of the monthly volume patterns. And that is something that, again, I don't use the relative strength on a monthly basis. That time horizon's too big, but daily and weekly is adequate. Okay. So as far as top-down approach, real simple. I'm looking for what sectors are improving with relative strength. If it's bright blue, these are the sectors: GLD, IYT, insurance, KIE, aerospace defense. Here's a stock, another one that's kind of interesting, Curtiss-Wright. If you look at what they make, like auxiliary machine gun parts and howitzer parts and all kinds of crazy, and sensors and things. In the aerospace defense sector, here's a stock that's starting to get some lift off. Let's take a look at the short term. And there it is. Okay, it's all recoverable, all good. This is Curtiss-Wright. Something started to develop. There's the relative strength. Why? How the hell do I know? Who knew? Is their defense contract getting something going on? Did somebody obviously knew? Let's take a look at the volume trend, and I'll compare this specifically to the on-balance volume tool as well. Bear with me a second. This needs to be auto-scaled, and we're good to go. There we go. Holy but gee willikers, Batman. I mean, here's a stock that I don't know what happened, what the announcement was. I really didn't find one, but Curtiss-Wright, it's a, one would think that it's maybe potentially at a double top. Okay, I'll give you that, meaning it's going to hit this old high as a resistance and fail. The relative strength, the difference between where it's at now and where it was then, there was no relative strength. The volume was divergent. It made a newer high relative to past or prior highs, and the volume was going down. The volume's going up. The trend of the volume's up. Something's going on, Curtiss-Wright. Let's take a look at the long-term chart. And one of my biggest allies is comparing monthly. So if you say, well, maybe it's going to stop at that high if you look at a daily chart. But when you look at a monthly chart, you go, well, wait a minute. You know what? Before the bottom fell out in January of 20 with the pandemic, the stock was, on its path to 150. And that might want to be what this thing goes. According to volume and relative strength, someone's buying Curtiss-Wright, and that's in the aerospace defense area. So that's how I literally do find opportunities in the market using these tools.
Terrific. Ursula, do we have any other questions for John this evening?
Oh, Stephen, I did forget to mention, I also have this little dice, and it says pray, buy, hold, and run or hedge. So some days I sit there and I flip my little dice. This one said pray.
All right. Well, we appreciate your time this evening. Thank you to John Person for his valuable time and expertise this evening. John does additional training online and via in-person training seminars in Florida. Again, please refer to his website for additional information. On behalf of CFA Society South Florida, thank you all for attending. Have a good evening, everyone. This concludes John's webinar this evening on technical analysis.